Now let's talk about trends, ranges, and breakouts. If the stock's price is overall moving upward, you would say that it is trending upward or that it's in an uptrend. If the stock's price is overall moving downward, you would say that it is trending downward or that it is in a downtrend. This is useful to know so that you may take advantage of a stock's price difference in an upward or downward pointing channel direction. For instance, in an uptrend, you may buy shares of stock when the price candlesticks pull back to the bottom channel line from the upper channel line, and then sell those shares after the price candlesticks move higher back up to the upper channel line. An uptrend, especially in a bull market, allows you much greater opportunity to take advantage of this buy-sell technique, whether it's with stock shares or option contracts. Keep in mind that uptrends don't last forever, and in the bigger picture of the overall longer-term stock price movement, that there are uptrends and downtrends, bull markets and bear markets. So at some point, the current trend will come to an end and a new trend direction will start. There are several economic market influences, and it is by the various market participants' reaction to these influences that a trend often forms, and in a lot of cases will last until another economic market influence occurs. These economic indicators can be anything from reports on new residential construction, company earnings, employment rates, new home sales, and many more. If the stock's price direction is in a downtrend, you may take advantage of a stock's price difference in a downward pointing channel. This downtrend stock price environment is somewhat less useful for buying and selling shares of stock because of the overall downward nature, and is better suited for buying and selling option contracts, which will be discussed more in detail later. You may still buy and sell shares of stock in a downtrend, but you will want to pay extra attention to your studies. When the stock's price isn't really trending upward or downward and is moving more sideways on a daily chart, for example, then it is ranging. A channel can be drawn for this ranging area. In a ranging area, you'll notice that for each day that the price doesn't close higher or lower than the channel lines. This will continue because no event has caused any real market influence over direction and can continue for several days. When a major event or events such as economic or market news causes enough influence in the market participants' perceptions, then a breakout can happen. When this happens, the daily price will break out of this channel either to an uptrend or a downtrend. Specifically, as shown here, for a breakout to an uptrend, a day must close above the top channel line. When this happens, it can provide an early opportunity for the trader to jump in and start buying shares of stock to sell higher, or to buy option contracts to sell higher. You'll also notice that this uptrend breakout of this ranging price area is confirmed by the fact that, by using your studies, that the day that closed with its price above the channel line also is shown to have closed above the white 10-day simple moving average, and the 10-day simple moving average stayed above the 20-day simple moving average instead of crossing down over it, a positive sign. And adding a 50-day moving average to the volume panel, you can see that volume was above this 50-day moving average line on the breakout day, another positive sign. In addition, the seemingly daily back and forth uncertainty of the MACD histogram finally shows another dark red bar above the previous dark red bar, supporting the upward momentum indicated. As you can see, the days following this breakout day actually close each day higher than the last for several days, confirming an uptrend. The thing to watch for here in this following uptrend is price to keep returning back down from the top Bollinger Band to find support by closing above the 10-day simple moving average before continuing back upward in the uptrend. It of course could close below the 10-day simple moving average to have to find support at the 20-day simple moving average or any other support area. If the stock's daily price would have closed below the bottom channel line, you would of course look for the start of a downtrend where you would play the downward direction with option contracts. You will also take note that false breakouts can happen. These These can happen because of various reasons or other economic news that is interpreted by market participants to be more concerning than the previous economic market news that caused the breakout to begin in the first place. If this happens, you may need to take precautionary steps to avoid a potential loss, which will be discussed in more detail later. So keep checking back to these videos, and if you've learned anything useful, please click subscribe and don't forget to leave a thumbs up.